We've got the first corporate on our show now, Caplin Point. Now, this is a company which makes a lot of laboratory medical equipment like vials, syringes, droppers, capsules, tablets, dry syrup bottles. Most of their revenues, about 86% of their revenues comes in from Latin America and Africa. Only about 14% of their revenues come in from the United States. They reported their Q1 numbers, look like a good set. In Q1, the revenues have gone up, margins have improved to 32%, and even the US business, which is currently about 14%, has seen a pretty good growth of about 12%. Vivek Partheeban, the COO at Caplin Point Laboratories, is now with us on the show. Vivek, morning, and thanks so much for joining in. First, if you could just break up the top line growth into your key markets, how much did Latin America grow? How much did Africa grow? And for US, I think you had given a guidance of 300 crore of revenues this year. Are you on track to achieve it?
Yeah. So as it stands, like you said, close to 86-87% of our current revenues come from Latin America. And the US is most of the rest, about 12-13% of the rest is from the US. This quarter, a substantial amount of the growth has come in mostly from Latin America. As we've given in our guidance, Q1 and Q2 for our US would be a little bit more moderate because we have an additional spare capacity in the form of a high-speed vial filling line coming in by October. So Q3 and Q4 for our US business will be substantially better compared to Q1 and Q2. But we've always been quite consistent with our numbers. In fact, because close to 90% of our business is private market based, so there's a fair amount of predictability in our growth and in our numbers. We're quite confident the US targets also would be met by end of this financial year.
So 300 crores US revenues by FY24, right?
That's correct, yes.
All right, Vivek, we'll get back to the numbers and the outlook from here on. Pfizer's injectable plant has been impacted in the United States due to the thunderstorm. Now, around 12 products are expected to be impacted. Is there any kind of overlap with Caplin? I ask this because I want to understand whether or not there's an opportunity for the company to go ahead and supply.
Yeah, so there is an overlap for a couple of products, but if you read into the situation a little bit more, I believe the impact might not be as high as it was initially feared. I believe the impact mostly was in the warehouses, and quite a lot of the finished goods, I believe, were destroyed. But I think the manufacturing capabilities of that plant continues to be okay. I don't really know too much into it, to be honest, but we don't really focus too much on occurrences like these. We need to be focused a little bit more on our long-term forecasts and what we target to achieve over this year and next year onwards. But the answer to your question is there is an overlap, and we are well prepared. In fact, today, we partner out with all of the products that we manufacture, so our partners are on the job as we speak.
But do you think it'll mean excess business, or do you think that the initial impact actually was maybe overestimated? Like the street maybe thought that there was a bigger opportunity for you.
So the public statement that I have read is that the impact may not be as great as it was initially feared. Yes.
Okay, so I guess you're not factoring any additional opportunities in, that 300 crores in the US you're talking about is X of whatever additional you managed to do with this Pfizer development, right, Vivek?
Yes. No, our guidance does not depend on what happens with other companies.
With some other manufacturer, yeah, got that. Okay, so I want to move on beyond the US because, like you pointed out, that other markets are much bigger for you, Latin America, Africa. Now, you did revenues of almost 1,400 crores, a little over 1,400 crores last year. Now, this year you're saying you should be getting 300 crores from the US. Let's talk about the rest of the world, the other big markets for you. What is happening there? Our colleague Ekta, for instance, was telling us that you're also looking into getting into more complex spaces in oncology, I think, ophthalmology. So if you could just tell us what the opportunities are and what's the run rate you're expecting in your other big markets like LATAM and the others.
Yeah, so we've certainly consolidated our position in the current LATAM markets where we're operating in. Obviously, our company has taken on a large capex over the last year, and then it will continue on to this year and potentially half of next year as well. We are getting into different dosage forms, different categories. Like you said, oncology is a space that we're getting into. We're also entering into the larger Latin American markets such as Mexico and Brazil shortly. We're getting into CIS markets in Southeast Asia and CIS and all of that now. So all of these put together, we feel that the next 3 to 5 years is going to be very crucial for the company for us to get into the next trajectory. What is important for us is to live within our means. We have not taken on any debt. We can remain completely debt-free. All of these CapEx expansion and followed up by the operational expenses, everything will be done in-house. So we feel that this is a good opportunity for us kind of to, over the next couple of years, I think it looks positive. Yes.
So Vivek, do leave us with some guidance if you can. I mean, what's the run rate that you would hope for at a company level for FY24 and margins? You've been in this band of 29%, 32%. You're at the top end of the band. You're right there at around 32. So will this year be pretty much the same, or can you actually break out on the top side of this margin range?
Yeah. We feel the margins will remain as they are, or they might continue to go up a little bit as well, because as revenue starts to catch up, especially in our newer initiatives such as the US, you will start to see some level of boost to the bottom line. Of course, in the next couple of years, once our oncology plant and everything goes on stream as well, the revenues will continue to increase, whereas our expenses will plateau out at a certain point. So we feel the bottom line is very good, healthy as it is, but there's chances for it to go up even further.
Okay. All right. Thanks for joining in today, Vivek. Good luck with those plans, and we look forward to more connects in the future. That is Caplin Point. Numbers have been pretty okay, and they've got plans of expansion in most of their markets.